Gold prices soared past the historic $4,000 per ounce mark on Friday before retreating, as investors reacted to former U.S. President Donald Trump's warning of renewed tariffs on Chinese goods. The brief surge highlighted the market's sensitivity to geopolitical and trade tensions, with investors flocking to safe haven assets amid uncertainty over global economic stability. In a fiery speech during a campaign rally, Trump hinted at imposing massive tariffs on Chinese imports if he returns to office, citing unfair trade practices and national security risks. The comments triggered a sharp rise in gold prices during Asian trading hours, with spot gold touching an all-time intraday high of $4,012. However, the momentum faded as traders took profits, and the dollar strengthened, pushing the metal back below the psychological $4,000 threshold. Analysts noted that while gold's quick retracement showed a lack of sustained bullish conviction, the metal remains underpinned by ongoing inflation concerns, central bank buying, and persistent geopolitical risks. Breaking above $4,000 is symbolic. It tells you investors are hedging against political volatility and policy uncertainty, said one market strategist. But the pullback shows that short-term traders are wary of overextension. The U.S. dollar index rose following Trump's remarks, supported by expectations that his proposed trade measures could reignite inflationary pressures, prompting the Federal Reserve to maintain higher interest rates for longer. Higher yields tend to weigh on non-yielding assets like gold, contributing to the price correction later in the session. Meanwhile, silver and platinum also posted modest gains but followed a similar pattern of initial spikes followed by retracements. The broader commodities market experienced heightened volatility as traders recalibrated their positions in anticipation of potential trade disruptions. Market participants are now closely watching responses from Beijing. China's Commerce Ministry issued a brief statement condemning unilateral and protectionist rhetoric, suggesting that retaliatory measures could be considered if tariffs are reinstated. Such developments could further inflame global trade tensions and potentially renew gold's safe haven appeal. Investors are also eyeing next week's key inflation data and Federal Reserve minutes for clues on the U.S. monetary policy outlook. If inflation proves sticky or geopolitical rhetoric intensifies, analysts believe gold could attempt another run above the $4,000 mark in the coming weeks. Despite Friday's retracement, gold has gained more than 25% this year, driven by global central bank accumulation, recession fears, and strong retail demand across Asia. "We're in a new era for gold," said another analyst. "What used to be a ceiling is now a floor, and every dip is viewed as a buying opportunity." The metal closed the day around $3,960 per ounce, still near record highs and well above last year's average of $2,300. Traders expect volatility to persist, with political headlines and global risk sentiment dictating short-term price action.